Hello everyone, welcome back to IBBI sessions. So far we have covered session number 1, 2, 3 and we are continuing session number 4. So right now we are going to discuss session number 4D. I will try to discuss more MCQs within the syllabus of IBBI. So the first question is, the term value in exchange primarily refers to the usefulness of property, the price achieved in an open market, value per particular user, cost incurred for construction. So if we discuss the options, the first one, usefulness of the property. This is actually value in use. For a specific user. The usefulness of property is value in use. The second option, the price achieved in an open market. This is actually value in exchange. Correct option for the question given. The third one, value for particular user. This is investment value. And fourth one, as you all know, this is cost, not market based. So the correct option is the price achieved in an open market, that is value in exchange. Second question, which of the following is not an element of value? We know what are the elements of value. We have discussed previously. Dust. D for demand, U for utility, S for scarcity, T for transferability. So out of the options given, scarcity is element of value, transferability is element of value, demand is element of value. Okay, all these are elements of values. So price is not element of value. Third one, a property value decreases because a new airport creates heavy noise. This is physical depreciation, functional obsolescence, external obsolescence, reinstatement cost. The concept is loss in value for external factors like outside of the property, not within the property boundary, like noise, pollution, adverse location changes, like that. All those are under external obsolescence. The correct option is external obsolescence. Physical depreciation is wear and tear of the structure, and functional obsolescence is outdated design or features and all. Reinstatement cost is insurance term. Okay. The reinstatement cost means, you can remember like this, reinstate. So cost to reproduce the utility, not identical production. Okay, you must remember this. Reinstatement means cost to reproduce the utility, not identical reproduction. So the correct option is external obsolescence. Fourth one, highest and best use analysis excludes. We know what is HABU. We discussed it thoroughly previously. Highest and best use. So the parameters of HABU are legally permissible, legally possible, financial feasibility, physically possible, and maximum productivity. So income tax rebate is the correct option for this question. This is not a parameter of HABU. The fifth one, a property is valued higher because metro connectivity is added nearby. This factor is infrastructure boosts accessibility, demand and income potential. So which factor it is? This is economic factor. Market value definition includes foreclosure sale, assumed building buyer and building seller, wholesale sale, government subsidy. The correct option is assuming building buyer and building seller. Market value assumes a hypothetical transaction between informed willing parties without compulsion. Valuer inspecting a property is performing which step? Limitation reporting, due diligence, reconciliation, and final certification. Inspection is a part of due diligence. That means doing work properly, correctly. Gathering physical, legal, and market data. So, due diligence is the correct option. Limitation reporting is part of final report. This is part of final report. And reconciliation, this is final step comparing the approaches. So this is not correct. The final certification is end stage. So the correct option is due diligence. A valuer inspecting a property is performing under due diligence. Okay. 8th question. A property value based on replacement of its utility is called reinstatement value. We discussed above. Reinstatement value is cost to replace with a modern equivalent providing same utility. 9th question. The most reliable method for vacant land valuation is market approach. For vacant lands, market approach is the best option. Direct comparison with the recent sales of similar vacant land is most reliable when market is active. Income approach is for income generating assets only. Cost approach, this is for special properties like schools and all, for improvements and all. And D, depreciated cost method, this is for buildings. So the correct option is market approach. 10th one. Valuer must disclose conflict under interest under Habu principle, RV rules, depreciation rules, FAR guidelines, RV rules. Calculation rate is defined as net operating income into value, net operating income by value, value by net operating income, and rent into years purchase. The correct option is net operating by value. A property generating 10 lakh NOI at a calculation rate of 8% as a value of the properties NOI divided by calculation rate means 10 lakhs by 0.08. This will become 125 lakhs. Reversionary value arises when rent remains constant, lease expires and rent increases, property is vacant, building life increases. The correct option is lease expires and rent increases. See, reversionary value is equal to future value when the current lease ends and rent reverts to the market rent. One, years purchase for a perpetuity at 10% is so YP perpetuity means till the life of the structure. One by calculation rate means 1 by 10%, 1 by 0.1 that equal to 10. The correct option is 10. 15th one. The depreciation method used in valuation tables is usually Valuation tables often use sinking fund method for depreciation. Annual sinking fund to replace capital. The correct option is sinking fund method. 16th one. If cost is 50 lakhs and depreciation is 20%, depreciation cost is right. If I deduct the depreciation, it will be 80%. So the answer will be 40 lakhs. The income approach is most suitable for agricultural land, owner occupied houses, hotels and cinemas, vacant plots. Hotels and cinemas. Land value is generally obtained through income approach, cost approach, development method and depreciation method. The correct option is development method. Replacement cost considers identical material, functional utility equivalent, heritage features, scrap cost only. We discussed above. We replace utility, not entire reproduction. Functional utility equivalent. Obsolescence is caused by outdated interior layout is called functional obsolescence. Loss due to poor design, loss due to poor layout. 21. Easement of necessity arises when the property becomes landlocked. This is correct option. And the options given are private road is voluntarily gifted, tenant needs access, public street is widened. The correct option is property is landlocked. We have a property here. This entire property belongs to A. Okay. Now A wants to sell part of this land. So he divides this portion like this. Now A kept this part of property just beside the road, and he wants to sell this rear part of the property to B. So now B needs access. Okay. And there are plots around. There is no road here. There are continuation plots like this. Sorry. There is a continuation plot having road like this, in the same way like here also. Now, so if you see, this part is the plot G has access to road. F has access to road. This is road. This is road. Plot C has access to road. Plot D has access to road. Plot E has access to road. Now, which part is landlocked? B is landlocked. So B needs access, right? So A must necessarily give the easement to B to access his plot from the road. So this is where easement of necessity occurs. This comes under which act? Laws related to real estate, right of way, Indian Easement Act 1882. Indian Easement Act 1882. 1882. Next one, leasehold interest value depends mainly on market rent, discounted cash flow, unexpired lease period, construction cost. Unexpired lease period is the correct option. Leasehold value depends on remaining lease term and profit rent. Okay, which is not form of a co-ownership. The options given are tenancy in common, joint tenancy, sole proprietary tenancy, and co-personary. The correct option is sole proprietary tenancy. 24th question. The doctrine of survivorship applies to. The options given are cooperative housing societies, joint tenancy, tenancy in common, registered leasehold. See, actually the doctrine of survivorship is a legal principle where upon the death of one co-owner, their interest in the property automatically passes to the surviving co-owners without needing a will or going through probate. The deceased owner's share does not form part of their estate to be distributed to the legal heirs. So legal heirs do not come into picture in joint tenancy. Mutation of property refers to transfer of possession, substitute owner in revenue records, transfer of title, registration of deed. Substitute owner in revenue records. A tenant paying 5,000 for 30 years without termination clause enjoys. The correct option is tenancy for years. See, tenancy for years means this is a type of tenancy is defined by having a specific fixed period of time with different start and end dates. Okay, they should be defined. Start date and end date. It can be from any length of time, even less than a year or as long as 99 years, like that. The tenancy for 99 years is very common and very popular also. You might have known already this. As long as the duration is fixed in this scenario, the tenancy has a clear start date and end date after 30 years and it automatically terminates the end of that period without a specific termination clause or notice requirement. When the date expires, automatically the agreement will be cancelled automatically. Tenancy at will. A tenancy at will has no fixed duration and can be terminated by either the landlord, that means lessor, or the tenant at any time, lessee also. Typically with a statutory notice period, example like 30 days. The existence of fixed term of 30 years means this is not a tenancy at will. Tenancy for years will not be necessarily having notice period. Okay, tenancy at will must have notice period because either of the parties can cancel the tenancy. Month to month tenancy means this is a form of periodic tenancy that automatically renews for successive monthly periods until either party gives proper notice to terminate. Adverse tenancy means adverse tenancy is not a standard legal term for a type of leasehold estate. The related concept is from the adverse possession, a legal doctrine allowing a person to claim ownership of a property by occupying it openly and continuously without the owner's permission for statutorily defined period. Example like 12 years in India. So tenancy for years is the correct option. A lease registered for 5 years with renewal option is classified as. The options given are perpetual lease, determinable lease, and fixed term lease and doctrine lease. The correct option is fixed term lease. See, the fixed term lease, actually this is a lease agreement for a specific predetermined period. So in the question it is given as 5 years. It has a definite start and end date and automatically terminates when the term expires unless the renewal option is exercised or mentioned clearly. Transfer of Property Act, sale of immovable property requires. So under the Transfer of Property Act, a sale of immovable property requires written and registered deed, oral consent, postal information, revenue survey number only. The correct option is written and registered deed. For any tangible immovable property of a value of 100 rupees or more, in case of reversion or other intangible immovable property of any value, a transfer can only be made by registered instrument. Okay, a sale deed. That is what a sale deed. An unregistered sale deed has no legal value and cannot be used as a proof of ownership. This is according to Transfer of Property Act 1882. Transfer of Property Act 1882. Encumbrance means ownership rights, restriction and liability on property, building permission, mutation. See, encumbrance means actually burden on property, like the document is kept in mortgage, that is encumbrance. So there is a burden on property by taking loans or something like that. So it is a restriction or liability on property. Okay, so this is correct option. Property jointly owned by husband and wife with equal rights is, the correct option is co-ownership. This is general legal term. Co-ownership is a general legal term for any situation where two or more persons concurrently own interests in the same real or personal property. Okay, a husband and wife owning a property together with equal rights fit this definition perfectly. The specific type of co-ownership could be a joint tenancy or tenancy in common, but the overarching the category is co-ownership. Sole ownership means this refers to a situation where only one individual owns the entire property or entity exclusively. Okay, the co-personary means we discussed already. This is a specific form of joint ownership under Hindu law related to ancestral property within the family, primarily by birthright. Okay, so husband and wife may be co-personers as per Hindu law in certain contexts, but co-ownership is broader. Okay, there is no any mention of Hindu law in question, so co-ownership is the correct option. Salvage value means final scrap value, market value, replacement cost, land cost. It is final scrap value. Sorry to mention, it is not a scrap value. Scrap value is different. Actually, the leftover material like reinforcement in the slabs all come under scrap. But salvage means it's a estimated resale value of an asset at the end of its usable life. So that is what salvage value means, but not a scrap value. Okay. The plinth area rate includes basement, superstructure only, roof slabs and walls, structure frame only. See, the plinth area rate generally includes the entire covered build-up area for the building, which encompasses both the roof slabs and walls. Functional obsolescence is reduced by using market comparison, cost to cure, discounting, and rental comparison. Cost to cure is the correct option. First one, the market comparison. It is used for overall property valuation by comparing a subject property to similar properties, not specifically to isolate or measure the cost of reducing functional obsolescence. And the discounting is this refers to financial techniques typically used in income capitalization approach to valuation, where future income streams are converted to present values. And the rental comparison is used in the income approach to estimate market rent, not to quantify the cost of correcting a physical or design flaw. Okay, so the correct option would be cost to cure. The cost to cure method is widely accepted approach in property appraisal for quantifying the depreciation caused by functional obsolescence. The value loss is estimated based on the actual or estimated cost required to eliminate the problem. Okay. So the next question is economic life refers to time building remains productive. The correct option is time building remains productive. See, the economic life of an asset, particularly a building or piece of equipment, is a period during which it is considered to be profitable or useful for its intended purpose. It is the duration over which the asset generates sufficient revenue or provides adequate services to justify its existence, which is often shorter than its physical lifespan. And physical life means an asset which is how long it is structurally sound, physically capable of functioning its economic life. So that is what physical life. But economic life means when it is no longer profitable to operate the asset. Okay, often due to high maintenance cost or functional obsolescence, even if it could be physically last longer also. So the correct option is time building remains productive. If effective age is 10 years and total age is 40 years, depreciation is. So the depreciation percentage is equal to effective age by total economic life. That means 10 by 40 into 100. The answer is 25%. Contractor's profit is typically 8 to 12%. Quantity survey method is used when building is standard type, rates vary widely, detailed measurement is possible, only land value is needed. Detailed measurement is possible. See, the quantity survey method, also known as the detailed estimate method, involves calculating the precise quantities of every material, item of work, or labor required for construction project based on the detailed plans and specifications. This process is highly accurate and it is typically used when detailed drawings are available, allowing for meticulous measurement of every component. And building is of standard type. Standard typical building often use simple approximate estimation methods like plinth area method, cubical content method for quick preliminary estimates. The quantity survey method, while highly accurate actually. So this option is wrong. So rates vary widely means wide variations in the rates might require careful rate analysis, which is part of detailed quantity survey process. But the condition for using the method itself is possibility of detailed measurement. So only land value is needed. This option is wrong. The correct option is detailed measurement is possible. Reinstatement value excludes demolition cost, site value, professional fees, cost of materials. Site value. Scrap value is reversionary value, demolition value, capitalized value, or market rent value. Demolition value. A building costing 1 crore with remaining life of 20 years as the annual sinking fund at 6% is equal to. See, actually here the annual amount A needed to accumulate a future sum F over period of n years at an interest rate R is calculated using. See, A is the annual amount needed to be accumulated. Okay. And F is the future sum. Or a period of n years. So F is a target amount, right? F is a target amount after n years. A is the annual amount needed to be accumulated. So every year we have to deposit this much amount periodically, continuously. So that is what A. F is the target amount we need, and N is the number of years. R is the rate of interest. So what would be the formula? A is equal to, that means annual periodic payments, right? Target amount F into R by 1 plus R whole power n minus 1. So that means annual periodic deposit is equal to future value into SFF. This is what? SFF, sinking fund factor. Okay. So the correct option is insufficient data. APR is calculated using, the correct option is gross floor area. Open terrace is included in FAR, excluded in FAR, included if 25% area counted only for commercial use. We discussed it thoroughly with the graphical explanation in previous session. So the correct option would be open uncovered roofs are not covered under FAR, okay, excluded from FAR. Building regulations almost universally exclude open areas such as open balconies, open terraces, and open parking spaces from the gross floor area calculation used to determine FAR limit. The FAR calculation only accounts for enclosed covered floor space, usable covered floor space, not facility floors, okay? Like parking, cellars, stills, all those are excluded. Only covered utility floors, like where people live, sit, stand, and use, those floors are considered. Basement used only for parking, or we discussed it, okay? Just now we discussed basement used for parking are excluded. See, basement and cellars are utility are a facility provided by the promoter or builder. Okay. Still floor used for parking is generally excluded from FAR. Market rent is greater than contract rent means lessee has profit rent. The present value of 1 rupee received after 10 years at 10% is. You have to reverse compound the value to get the present value. FE is equal to future value. FE means future value. Present value into 1 plus R whole power n. This is compound interest formula. So the PV is equal to FE into FE divided by 1 plus R whole power n. That means 1 rupee divided by 1 plus 0.1 whole power 10. So this option is how much this will be? 1 by 1.1 whole power 10. So this is the correct answer. Income calculation assumes future income is irrelevant, property has infinite life, NOI remains constant, market rent is equals to contract rent always. So here the correct option is property has infinite life. See, the income calculation approach to valuation is based on the premise that the value of income producing property is a present value of its expected future income stream. This method often uses a calculation rate that assumes a property will generate income indefinitely, that means in perpetuity, or over a very long economic life. To simplify the calculation, to value is present value is equal to net operating income by calculation rate. We discussed thoroughly about this. Calculation rate means the return percentage subject to the investment kept. Okay. And why other options are incorrect? Future income is irrelevant. Future income is a primary factor in income calculation. So it is very important. So this option is wrong. It is relevant. Future income is relevant, not irrelevant. The property has infinite life. Okay, this we assume the property will be in good condition. It will be in perpetual condition, right? So that is right. And y remains constant means while a simple formula P present value is equal to net operating income by rate of capitalization assumes a constant NY, right? In perpetuity, more sophisticated calculation methods like discounted cash flow analysis explicitly account for changing NY over finite holding period. So NY can be changed. Then it is not necessarily be remaining constant. Okay, so this option is wrong. So market rent equals contract rent always. That means the calculation method uses income actually generated by property, which is usually based on the contract rent, right? An appraiser will use market rent to determine potential income or market value by assumption of equality is not foundational element of the calculation method itself. So there need not be any equal market rent, something like that. So this option is wrong. So the correct option is property has perpetual life. That means until its full utility life, economic life. Okay. Value must follow the code of conduct under ICAI, IBBI, Town and Country Planning Act, State PWT. The correct option is IBBI. That means Insolvency and Bankruptcy Board of India. Question number 50, the last one. A valuer concludes its final value after applying So the correct option is reconciliation. See, what is reconciliation? It is also known as correlation. It is a final step in valuation process. The valuer reviews and analyzes the results derived from the three primary approaches to value. First one is sales comparison approach. And the second one is cost approach. Third one is income capitalization approach. So these three are important approaches for the valuers. The valuer then weighs these indicators of value based on their reliability and relevance to the specific property and market conditions on the date of valuation, ultimately arriving at a single final estimate. So that is what reconciliation means. It's a comparison method of all approaches and correlation method, right? B is mutation. Mutation refers to changing the title of ownership records to property in government land, revenue departments. So it is an administrative process, not a business of valuer. Okay. Litigation refers to legal proceedings which might be consequence of disputed valuation, but not a step into the standard valuation process itself. Rescission means refers to the cancellation of a contract. It's a legal term unrelated to concluding a property valuation. So the correct option is reconciliation. So that's all for today. We'll meet again in another session. We'll discuss many MCQs and many concepts further. Please subscribe my channel and stay tuned for more updates. Thank you.